Malaysia is proposing a new common currency for the East Asian region pegged to gold. Prime Minister Tun Dr Mahathir Mohammad says this currency would not be used locally. Rather, it is to be used for settling trade. He believes that such a currency would be more stable. By pegging the new currency to gold, he says it could be used to evaluate exports and imports among the East Asian countries. Mahathir says the new currency could also be extended to the rest of the world outside the East Asian region. The PM says currencies are vulnerable to manipulation because the global market is tied to the US dollar. He also slammed the US for its fondness for labelling countries after it placed Malaysia, Singapore and several other countries on its watch list of potential currency manipulators. The US Treasury said it was monitoring Malaysia, citing interventions by Bank Negara in foreign exchange markets. In response, the central bank said it only does so to ensure an orderly market and avoid excessive volatility. OneMDB and MOF Inc. have filed an appeal against the London Commercial Court's decision to delay a suit between the Malaysian State Fund and Abu Dhabi's IPIC to allow further arbitration. To recap, Malaysia is attempting to get its agreement to the $5.78 billion about 24.26 billion ringgit settlement with IPIC overturned. However, the court in London granted a temporary stay of indefinite duration earlier this month. It will now supervise the arbitration proceedings between OneMDB and IPIC behind closed doors. However, Malaysia is not satisfied with the decision. Attorney General Tommy Thomas explains this is because it allows for the issue of massive fraud that is of public importance to be first determined without public scrutiny. OneMDB and MOF Inc. are challenging the consent award, requiring them to pay billions to IPIC and ABA Investments, arguing that the agreement was engineered by Datuk Sri Najib Razak as part of a conspiracy to defraud. Under the deal, Malaysia is obliged, among others, to take full responsibility for all interest and principal payments under two bonds issued by OneMDB that IPIC jointly guaranteed. As of May 2019, $1.6 billion have been paid, leaving a balance of $4.16 billion. Maybank saw first quarter earnings inch 3.3% lower to 1.8 billion ringgit as it made additional provisioning for clients affected by the challenging operating environment. Revenue, however, rose 12.6% to 12.98 billion ringgit on expanding loans and fund-based income. The country's largest lender by assets saw net interest margin shrink just a touch thanks to stiff competition. It did not declare any dividend. Maybank Chairman Datuk Mohyani Shamsuddin says the lender's results were within expectations, given the softer outlook that had been expected as a result of ongoing global geopolitical issues. Meanwhile, Group President and CEO Datuk Abdul Farid Alias sees Bank Negara's recent revision in interest rates supporting economic expansion in the coming quarters and lead to a stronger growth path for Malaysia. The expected rebounds in mining and agriculture, as well as the revival of major development projects, should also help. He adds that within the region, ASEAN continues to be an important market for the group, with its growing population and stable economic growth. Telekom Malaysia reported an almost twofold jump in first quarter net profit to 308.28 million ringgit, thanks mainly to a decline in the group's operating cost. However, top line was marginally lower, down 2.4% to 2.78 billion ringgit, as the telco made less from voice, internet and multimedia services, as well as non-telco related services. TM's acting group CEO Imri Mokhtar says revenue challenges unexpectedly continued to persist, with intensifying competition and price erosion. While TM went on to register growth in its Unify broadband customer base, the group saw income from Streamix and Unify Mobile continuing to fall. Moving forward, Imri says competition is set to become stiffer, with players exploring opportunities to sustain and grow their business in an ever-evolving industry and landscape. In the coming months, the group says it will continue to focus on accelerating convergence and empowering digital. It plans to beef up its resilience with its performance improvement initiatives and also improve on customer experience. DRB-Hicom has swung back into the black in the fourth quarter, thanks in part to the higher sales of Proton cars. The group reported a net profit of 127.86 million ringgit, an improvement from the net loss of 59.41 million ringgit previously. Meanwhile, revenue rose 16.4% to 3.47 billion ringgit. As for its full-year report card, however, earnings plummeted 71.45% to 122.87 million ringgit, while revenue inched up 1.9% to 12.48 billion ringgit. On its prospects, DRB-Hicom says it will be focusing on cost optimization through prudent management practices across its various businesses and expects to deliver a satisfactory performance for FY20. Commenting on its automotive business, the conglomerate says it will continue its growth via launches of new models by its marques. It notes that following the launch of the X70, Proton has continued its upward momentum, which is expected to be sustained with the recent launches of the facelifted Iris, Persona and Exora models, and boosted by the impending launch of the updated Saga and the locally assembled version of the X70. Meanwhile, its other businesses will continue to expand their customer base in order to remain competitive.